Hello, in this video I'm gonna walk you through the financial model Excel template. I will show you the main inputs, the core outputs, reports and charts. So let's get started. On the dashboard you can input your main assumptions or drivers for the model. Under core input section, see the core financials and the main charts related to the model. So let's start off model setup from the launch date. Let's imagine you are going to start your business in April 20. At the next table you can input the marketing budget and visitors assumptions. So you are able to input two marketing streams, offline marketing and online marketing. For both you have average monthly marketing budget by years. For example, for online I can set $5,000 per month with growth of 1,000 each next year. Also you have cost per visit, which can be $1, $1.50, $2, $2.50 and $3 for example. If you don't need offline marketing stream, you can just clean it, or vice versa, you can clean online marketing stream, or you can keep it both and put information in offline marketing stream in the same way as we just did in online. As a resulting point you have total visitors count by years, and the next point is to input your conversion rates to see how it converts to the customers. So the first step is to convert your visitors to sales opportunities. Let's pretend it will be 10%, 11, 12, 13 and 14. It's also changeable by years. So 47,000 of visitors multiplied by 10%, so you have 4,700 of sales opportunities. The next step is to convert your sales opportunities to engaged opportunities. Let's imagine it will be 50%, and 4,700 multiplied by 50% will be roughly 2,400 of engaged opportunities. And the last step in this funnel is to convert engaged opportunities to total deals or total new customers. Let's pretend it will be 10% for the 2020, and 2,400 of engaged opportunities multiplied by 10% will be 239 of total deals or total new customers. The next step is to allocate your deals by products. You have 3 products in this model, which you can change the names, for example base, medium and pro, or any other name which you want to use. So you can allocate them up to 100% in the next way. So you can input, for example, 35% for base plus 5% of growth each next year. The same for medium, and pro will be calculated as 100% minus base and minus medium for this particular year. If you don't need some of the products in the model, you can just clean the line item, and base will be 0, and for medium you will have some assumptions, and pro will be 100 minus medium. If you will input something wrong, for example I will input here 80% and for the medium 30, so 100 minus 80 and minus 30% will be minus 10%. The model will show you the red color here, which means you input something wrong. So once you set up it correctly, for example 60%, so pro will be 10% and there will be gray color. The final step to set up your revenue assumptions is to set up your pricing and billing inputs. So you have regular price per month broken down by 3 streams, so you can input, for example, $50, $55, $60, $65 and $70 by years. Additionally, you have ability to put upsell percentage and upsell extra amount. If you don't need them, just clean it, and the booking price per contract will be exactly the same as regular price per month. If you want to use upsell, for example, 10% of your customers will have upsell of $10, means then $10 multiplied by 10%, and weighted average will be $1 additional of upsell for each contract. So $1 additional plus $50 will be $51 for year number 1, then $56 for year number 2, 61, 66 and 71. If you need more upsell, for example 100, so you will add another extra 100 multiplied by 10%, which is $10. So 50 plus $10, which is 60. I hope that makes sense. So once you set up all the inputs related to the revenue, expenses, wages, and cost of services sold, you may review the core financials, where you can see the profit and loss line items, operating cash flows, the cash, and see the main charts, which includes active customers, profitability, the cash flow, and the cumulative cash flow. On the Seasonality tab, you can input your marketing expenses seasonality breakdown across the months. For example, in January, you're going to spend 10%, then 5, 15, 5, 10, 15, 5, 10, and 10. On the total, you should always have 100%, which is breakdown of 100% of your marketing expenses across the year. So below you may see the chart of how it is allocated across the months within the year. If you don't need any seasonality, you can just input 1 divided by 12. Just copy this, and you will not have any seasonality across the year. So all months will be equal. Additionally, you have this check here if something is wrong, and if some is not 100%, it will be in red color, and it will show the amount, which is 97%. Additionally, on the bottom, you have the calculation of marketing expenses broken down by years and broken down by months. On the SaaS charts tab, you may see the main SaaS KPIs and metrics broken down by two sets of charts. On the left side, you can see the monthly amounts for the 2 years, and on the right side, the monthly amount for 5 years. So on the top set of charts, you may see the MRR breakdown by 3 offerings. In this case, this is Enterprise, Medium, and Base. The next couple of charts will show you the MRR movement, which is new MRR, churn MRR by months, and as a result, on the yellow line, you may see the active MRR. On the next couple of charts, you will see the lifetime in months of the Base, Medium, and Enterprise customers. The next couple of charts will show you the lifetime value broken down by offerings. The next chart will show you the customer acquisition cost by months for the 2 years and for the 5 years. The magic number broken down by Base, Medium, and Enterprise, and for the total customers. The magic number shows you the efficiency of using marketing expenses in terms of the acquisition of new booking. Average recurring revenue per customer is total and broken down by offerings. New visitors and new customers, which shows you the efficiency of your SaaS funnel conversion rates. The MRR growth, which show you the new MRR in dollars and month-over-month growth of MRR. The SaaS quick ratio, which shows you the ratio between new MRR divided by churned MRR. And one of the important SaaS KPIs, LTV to CAC ratio, which should be also always more than 1. In this case, it is minimum, I would say this is 20 in this case, so business works very good in this case. Yeah, that's it for this step. In the Financial Charts tab, you may see the main financial KPIs broken down by 2 sets of charts. On the left side, you may see the 2 years broken down by months, and on the right side, you may see the 5 years broken down by months. So on the top set of charts, you may see the EBIT breakdown by months. The next set of charts will show you the EBITDA in comparison to revenue and cost of services sold. The next chart shows you the operating cash flow broken down by cash inflow and cash outflow. The next chart shows you the cash balance. The next chart, productivity KPIs, which is average revenue per FTE and average OPEX per FTE by months. The next one is the revenue breakdown by main revenue streams, which is by default Enterprise, Medium, and Base. And the last one shows you the monthly costs by P&L category, which is cost of services sold, salaries and wages, variable expenses, and fixed expenses. On the Customer Charts tab, you may see the main information about your customer dynamics. On the top pair of charts, you may see the customer breakdown by base, medium, and enterprise, which are default offering names, and you may see this breakdown by months for the 2 years and for the 5 years. On the next set of charts, you may see the customers movement, which includes new customers, churn customers, and active customers as a result in yellow line, also broken down by months for 2 years from the left and for the 5 years from the right side. On the Income Statement tab, you may see the main line items of your profit and loss, which is total revenue, total cost of services sold, gross margin, salaries and taxes, and payroll taxes, variable expenses, fixed expenses, EBITDA, total depreciation and amortization, EBIT, interest expense, net profit before tax, tax expense, and as a result, net profit after tax. Please note that by clicking on this plus button, you can unhide each of the category and see digitalization, for example, for the fixed expenses or variable expenses, and for any other category. You may see the values by months and all the breakdown by line items. On the Cash Flow tab, you may see the cash flow broken down by operating activities, financing activities, and investing activities. Cash Flow Indirect shows you the same operating activities, investing activities, and financing activities bar, but in more collapsed form, so it's more easy to see the values by months and more easy to read the numbers. On the balance sheet, you may see the breakdown of your balance sheet by current assets, which is cash and accounts receivable, non-current assets, which is fixed assets, current liabilities, non-current liabilities, and your equity. The summary of these three statements you may see on the financial statement summary, which will show you the annual numbers for income statement, cash flow, and balance sheet. And using this selector, you may select specific year to see this year by months. So on the top you have the main income statement line items and the charts, which will show you this information by years and by months. Then the balance sheet KPIs and charts, and the cash flow statement, charts, and the absolute values. On the KPI tab, you may see the main benchmark KPIs for the SaaS industry, which is LTV to CAC, churn rate, month-over-month net MRR growth percentage, gross margin, and EBITDA percentage. You may set the industry-specific KPIs which works for your country or for your region. For example, the EBITDA percentage can be 30%, for example. So you may see on this chart that EBITDA percentage now is 30%. All the values calculated by the model using the assumptions you input. You may see in here the values by years, and the same information you may see on the charts, which is LTV to CAC, churn ratio, month-over-month MRR growth, gross margin, and EBITDA. On each chart, the orange column, this is industry-specific benchmark, and blue column, this is the value calculated by the model. So using this table, you can easily compare where are you in terms of the industry-specific benchmarks and how is your business works in comparison to other businesses. On the top revenue tab, you may see the revenue breakdown by main revenue streams, which is by default base, medium, and enterprise, as well as the breakdown of absolute values by years and percentage allocation by years. On the revenue charts below, you may see the same information on the graphical form. So on the left chart, you may see the percentage allocation, and on the right chart, you may see the absolute values allocation by years. On the revenue depths and monthly run rate, you may see the detailed year, which you can select here and see the absolute values breakdown and percentage allocation in the pie chart. On the revenue bridge, you may see the main factors of revenue growth between first year and the last year, which which you may change here, for example, starting from 2021, 2023. So you may see on the left side 2021 total revenue, on the right side 2023 total revenue, and the main drivers of your revenue growth broken down by main revenue streams. On the top expenses tab, you may find the breakdown of top 4 expenses categories, and all other expenses collapsed into other category. You may see the breakdown of absolute values broken down by years with the total below, and also to the right you may see the percentage breakdown of these expenses. The same information you may see on the charts below, which you may find the percentage breakdown and the absolute values breakdown. On the couple of charts below you may find expenses depth and monthly run rate for selected year. You are able to change this year, and you may see the absolute values and percentage breakdown on the pie chart. On the expenses bridge you may find the main drivers of expenses growth between these 2 years. These years are also changeable. So you may select the first year and you may select the last year. And you may see that total expenses starting in 2020 will change to total expenses in 2024 by this waterfall. On the break-even tab, you may find the calculation of revenue break-even level and break-even chart. For this particular use case, you may find that your revenue break-even level is less than actual revenue calculation. This means that company is profitable. On the valuation tab, you may see the calculation of company valuation based on the cost of equity, which you may input here, cost of loans you previously inputted on the dashboard, calculation of resource share you may see here, there is also tax rate, and here you may find the weighted average cost of capital. In the valuation model there is 2 valuation methods, which is EBITDA multiple and revenue multiple. You may select one of them, and below you may input multiple of methods. Based on this information we can see terminal value, which is calculated on unlevered free cash flow. You may see the present value of unlevered free cash flow, NPV, and multiplicator evaluation for this particular company. On the DCF tab, you may see on the top unlevered free cash flow calculation in $1,000. As a result, you may see the unlevered free cash flow. And on the bottom you may see the scenario analysis for your total enterprise value. The first scenario factor is discount rate or weighted average cost of capital, which is 12, 14 and 16. These cells are also changeable. And the second factor for the first scenario analysis is EBITDA multiplicator, so you can use this multiplicator as an assumption as well. So you may change it to 8%, for example, and you may see the different values for your enterprise value. The second one is terminal perpetuity growth rate, which can be changed as well, for example 5%, and you may see below all the enterprise values scenarios. On the burn tab, you can find the calculation of cash burn ratio, which consists of average burn amount across the year, average annual cash balance, and calculation of cash burn ratio. On the charts above, you can also see the cash burn ratio by years. In the negotiation table, you may see the calculation of investment round and negotiation round, up to 3 rounds for each. So on the top, you may see the assumptions. First is a year of valuation or exit. By default this is 5 years. You can change it to another value, for example 4 or 6 years. You can see the calculation of forecast annual free cash flow and multiplicator based on the valuation tab. Here is the calculation of valuation in future value also based on the Valuation tab. Then we have the assumptions and calculations for 3 investment rounds. The first one is months of investment. You can say month number 2, for example. Investor required IRR, for example 45%, amount of investment $900,000, duration of investment, which is 5 years minus 2 months, which is 58 months. Here is a calculation of required future value for investor, and the shares, cumulative investor share and cumulative founder share, based on these assumptions. In terms of negotiation round, you can input individual investor share as an assumption, for example 1.5, and you may see the calculation of future value for investor and individual investor ROI and individual investors IRR. The color coding in the model is very simple. You may change any yellow cell in any yellow sheet within the model. This means that this yellow cell has some input, assumption or driver which impacts the calculation within the model. Blue sheets means that on these sheets there are some charts, reports and other information which can be useful for reporting purposes. On the tabs without color, you have some extra calculations related to revenue, to debts, equity, inventory and everything which is needed for the reporting. Additionally, you have Contents tab, which allow you to navigate across the model very simple. So you may click on any report and you can go back. It is broken down by reports, assumptions, statements and setup. There is short explanation about what each tab does, but if you want to know more, you can go to How To and to see more detailed explanation of what each tab does and what inputs you may find on this sheet and what kind of outputs you may find on this sheet as well. Any header of this section is also clickable, so you may click on, for example, Book Assets and you go directly to this tab. On the Existing Customers Setup tab, you may input the information about your existing customers, broken down by base, medium and enterprise revenue streams. The names of the streams obviously you can change on the dashboard, which I explained it previously, so you can input next information. Average annual contract value by months. Automatically will be calculated MRR, which is 1/12 of your annual contract value. Then you can input churn MRR, new customers by months, active customers for particular months, customers renewals and churn customers. In each yellow cell you have the note what you're supposed to input here, so it's just easier for you to understand what you need to put here. The same way you can input information for the medium offering and for the enterprise offering if it's needed. If there is no customer for these offerings, you can just clean this information from here and that's it. On the Customer Movement tab, you can input information about your customer churn and customer migration across the plans. So on the left side, you may see the average monthly churn rate broken down by your 3 main offerings, which is by default base, medium and enterprise. In this tab, you can easily change your monthly churn rates by years, for example 7, 6, 5, 5.5 and 4. You can see immediately the customer movement chart on the bottom. Let's change it. And in this chart you can see the new customers, churn customers, and as a yellow line you can see the active customers. The same way you can change churn rates for the medium and for the enterprise offering. On the Customer Movement tab, you may input information about monthly migration from one plan to another plan. For example, upgrades from base to medium can be 1% per month, and to enterprise 0.5%. Or downgrades, for example, from enterprise to base, which can be 0.2% or 0.3% for medium. On the cost of services sold, you may set up to 5 cost of services categories as a percentage of total revenue. Let me show you how it works. For example, one of the categories can be the hosting. And let's pretend this will be in 2020 10% of your total revenue, then 11, 12, 13, 14 for example. So on the top you may see the calculation of total revenue based on the assumptions you input before on the inputs and the dashboard tab. And below you may see the calculation of hosting expenses as a percentage of total revenue by years, and you may see this breakdown by months as well. So the summary of your cost of services sold you may see in income statement under total cost of services sold tab. Here you may see the breakdown by line items and by months. On the wages tab you can input your headcount by categories with hire and fire date, with annual salary, with ability to input different number of employees by years, with annual salary rise percentage, with monthly bonus and tax rate. Let me give you a couple of examples. Let it be CFO, which you are going to hire in March 20. You are not going to fire him, so the fire date will be December 24. So annual salary can be $50,000, and this will be one CFO over the time. So you may see one CFO, which is one headcount, starting from March till the end of the model, which is December 24. Also you can input 5% of salary growth rate. You may see the amounts by years connected to this annual salary and impacted by annual salary rise. Let's set up 10% monthly bonus and 5% of tax rate. So you may see below the calculation of salary broken down by months, monthly bonus, which is 10%, and 5% of monthly taxes related to the payroll. Another option would be admin account, which will start in April, which will grow till the end of the model with annual salary of $30,000. Let it be in year number 1, 2, then 4, 6, 8, and 10 headcounts. 3% of annual salary growth, 5% of monthly bonus, and 5% of payroll tax rate. So in here you may see total staff numbers, which is 2 for the year number 1, 2020. Starting from year 2021 you have 4, then 6, 8, and 10 in the last year of the model. Again, calculation of salaries for these two, in this case 4 headcounts, calculation of bonuses, and calculation of monthly based taxes. You may see in income statement total salaries and wages, and here you may see the total amount of bonuses, payroll taxes, and wages for these headcounts. On the variable expenses tab, you can input up to 15 line items of your variable expenses. So please note that you can input only in yellow cells, so first 14 cells are changeable and the last one is already predefined, which is customer acquisition cost, which you input previously in the dashboard. So for this customer acquisition cost you have amounts without any need to input any assumptions. All other categories are broken down by 3 categories: as a percentage of total revenue basis, as dollars per active customer, and as dollars per new customer. So on the top you have 3 bases for the calculation of variable expenses categories: total revenue amount, active customers, and new customers, broken down by months. So now you can input the names of categories, for example utilities. So you can input a percentage of revenue, 2%, 3, 4, 5, 5.5 by years. Below you may see the calculation of this line item by months, and additionally in the same way you can input your variable expense as a dollar per active customer, 5, 4, 6, 7, 8, and as a dollar per new customer, 1, 2, 3, 4, 5. You have also notes for each of the type for these variable expenses with some explanation of what you are supposed to input in this cell. And as a summary, in income statement, you may find a section of variable expenses, and you may see all the detailization of variable expenses line items and the detailization by months. On the Fixed Expenses tab, you may input up to 15 line items for your fixed expenses. Let me show you how it works. For example, you have utilities. You will start pay starting from March 20 till the end of the model, which is December 24. You may see it here. Let's pretend periodicity will be daily with amount of $50 per day. So you may see these amounts in here. It is calculated based on count of days within this month. So obviously in March 20 you have 31 days. That's why you will have 1550. In April you have 30 days. This means this will be $1500. Also, you have ability to input some growth rate year over year. Once you input this growth rate, you will see that your utilities will grow over year. Let me give you a couple of other expenses types. For example, advertising. Let it start in March and finish in August 24. This will be on weekly basis with amount of $100 without any growth. So starting from March till August 24, you have $400 per month, which is 4 weekly payments each month. And that's it. Another option is bi-weekly. For example, $500. You can start from July, for example, and you will have 2 payments, which is 2 bi-weekly payments within the month. $500 multiplied by 2, you have $1,000 per month. Again, you can input some growth rate, and you will see that your advertising expenses will grow year over year till the August 24, which is the last date of this expense type. Another option, office setup, which can be one-time payment, which will happen in February 20 with amount of $5,000. Obviously, you should not input any growth rates because this is just one-time fee, and you may see that office setup will happen in February 20 with this amount. Another option, insurance. Let it be start from January 20 till the end of the model, and it can happen monthly with $1,000 per month, with 5% of growth first year, 3% of growth second year, 2% of growth third, and 1% in year number 4. So you may see this calculation here. Starting from January 21, it will grow for 5%, which is $50. And starting from January 22, it will grow for 3%, which is additionally $32. Another option, quarterly. You may see that insurance will be paid $1,000 each quarter. You can start it, for example, from February, and this will be shifted to 1 month forward. Another option, semi-annually. In this case, you will have insurance payments once per half a year, again with a percentage of growth. And the last option is annual payments or yearly payments. You'll pay one time per 12 months, starting from February till December 24. For each expense type, you can use growth rate, and the calculation you may see in here. Also, in income statement, you may find total fixed expenses group. If you will ungroup this section, you can see these amounts broken down by months and by fixed expenses line items. On the Assets tab, you may input up to 7 assets line items and change this accordingly. For example, for the line item number 1, office expenses, you can set up the launch date for this asset type, for example March 20. You can input useful time years, let's say it's 1 year, and the asset cost, for example $50,000. So you may see in the calculation below capital expenditure, which is in March 20. You may see the calculation of book depreciation for 1 year according to the useful time. If you will set 2 years, for example, you will see that it will be amortized fully for February 22, which is 2 years from March 20. And you can see the closing net book value of this asset. Additionally, you can input up to 6 other assets line items. So in income statement, you may find the depreciation and amortization amount for each month. In the cash flow, you may see the fixed asset capital expenditure. And on the balance sheet, you may see the total closed net book value for these assets. Also, on the top of the dashboard, we have debt assumptions. Let me show you how it works. So for each debt, you're able to select the debt type. There are 2 debt types in the model, which is annuity and usual. Annuity means that each monthly payment, which consists your debt repayment plus interest expenses, will be equal each month. In case if you will select usual, your main debt repayments will be equal parts and interest will be just interest on the debt's closing balance. Let me give you an example how it works. So you may input some amount of the debt, the launch date, term will be 60 months, and interest can be 5%. You may also input the grant, which is just simple amount, which is paid in some specific months, and that's it. No repayments, no terms in terms of interest. So all the calculations of the debts you may see on the Capital tab. Calculations for the debt number 1, debt number 2, debt number 3, total debts with grants. These calculations impacts income statement, interest expenses, the cash flow, interest paid, debt drawdowns, debt repayments, and on the balance sheet you have the debt closing balance. In the cap table, you can input the main cap table assumptions for funding, angel, seed and Series A rounds, see some summary and calculations and reports. So let's begin from the founders information. On the top left side, you can input up to 3 founders and up to 5 categories of employees. You can set the names. You can input here also common stock and common options. So you can input some amount. For example, 500 of options for employee number 1. You're also able to input unissued employee stock options plan if it's needed. If it's not needed, you can keep it as 0 by default. So as a result, you may see the total outstanding stocks and options and the dilution across all these shareholders. The next step will show you the assumptions for angel round. So you can input employee stock options increase on pre-funding, for example 600. You can set date of close, which can be April 20, for example. You can set the pre-money valuation, which can be some amount, 500,000. We have up to 5 angel investor or investor groups. You can input some amounts of funding. Below you may see the calculation of shares prior to angel round, the average share price, the sum of angel investment and post-money valuation based on the pre-money valuation and equity round. Exactly the same structure for the seed round and for the Series A round. Below you may see some summary charts and tabs. So in here you can see the shareholders, which is founders, employees, and new options pool broken down by shares and dilution. Additionally, you have angel investors on the next tab to the right, seed investors, and Series A investors. Below you may see more detailed cap table calculation based on the names of founders, employees, and angels. Again, you have common stock, common options, total outstanding, the dilution percentages across these shareholders. In the next step to the right, you can see the angel investment amounts, count of shares, and the dilution after angel round, seed round, and Series A round. Additionally, you have options tab, where you can see the capitalization table summary on the top. You can see the capitalization table new options, which is angel, seed, and Series A. And you can input the capitalization for new issuance of options. For example, founder 1 can have in seed round another 600 options. Employee 1 can have in Series A some 300 options. As a summary, you have 3 reporting tabs which can be printed. This is cap table print, the detailization of funding, angel, seed, and Series A round, more detailed angel cap table round, which is summary of cap table before angel, after angel, and the breakdown of investors by investor names, dilution, outstanding, and common percentage. The same structure has seed cap table, it has founder cap table, angel investment and seed investment detailization, and on the top you can see the summary of cap table, after angel and after seed funding. Also, on the top of the dashboard you can set the corporate tax rate which works for your country. For example, it can be 30%, and you may see the calculation of corporate tax in income statement in the line tax expense. On the cash flow you may see the corporate tax paid. By default this is December. And on the balance sheet you may see the corporate tax payable by months. On the top of the dashboard you have currency, denomination, and taxes setup. So currency inputs means that you can input all your drivers for the model using one currency. You have currency outputs. It can be the same as currency inputs, and it can be different from currency inputs. So let me give an example. When you input in United States dollars, you have euro as an outputs, and for this case you can set up currency exchange rate. This is 1.2 for example. In this case you will have in the model all your inputs in United States dollars, all your outputs in euros, and there will be a conversion rate between currency inputs and currency outputs. Additionally, you have denomination, which means that you can denominate all your outputs on the reports. In this example, you have denomination is 1000, means that your outputs is denominated by 1000. You can select millions. You may see that now it is in $1 million. You can set also billions or without any denomination. Additionally, you have corporate tax setup. You can change this number and this will impact tax expenses in your income statement. I hope you enjoyed my video. Thanks for reviewing this. You can find more on my website finmodelslab.com, and we'll see you later in the next videos.